Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. Today is the first day of the month of October, and you know what's coming out this day? A lot of macro numbers have come out overnight. That's inflation. We're going to be looking at that and giving you an update of what's happening there, as well as second quarter GDP growth numbers. Those are also out. With regards to corporate actions, we'll be giving you an overview of what's happening with Kengen. They have put out a public notice with regards to the redemption of a 10-year public infrastructure bond that expires in the month of October. We'll be giving you an update of that. But when we get into our insights and our debrief after the break, we will be talking about sub-Saharan African markets. What is happening there? What is the foreign investment sentiment looking like? Are there net buy positions out there, or are foreigners net sellers? And also we'll be taking a look at the macros in these other countries, countries like Nigeria, the wider East African community, countries like Egypt, to understand what is happening there. Mr. Charles Miano is an analyst with Nabo Capital, and he covers sub-Saharan African equities. He'll be giving us an overview of what opportunities he's seeing there, as well as what sentiments are driving equity prices in these other parts of the continent, if nothing else. And just to compare, is it better to put your money outside of Kenya, or is there still opportunity in Kenya? Coming back to Kenya, we'll be looking at the GDP growth outlook. So second quarter numbers came out overnight, and we saw that the second quarter 2019 growth had slowed down to 5.6% from 6.4%. First quarter numbers had also slowed down to a similar level of 5.6%. And then the question we're asking ourselves today, how is the economy doing? The numbers don't look too great. Other numbers that have come out overnight, inflation numbers, 3.83%. That was the inflation number that came out for the month of September. Certainly a very good number. It's the lowest that we have seen in this particular year. When we compare that with what's happening with the GDP growth rate, the question is it good to have a very low inflation rate while your GDP numbers are actually fluctuating and coming off? And is, more importantly, is the person on the street actually feeling any impact of any of these numbers? In other words, your 1,000 shillings, is it better off for you in the month? Has it been better off for you in the month of September or not? So that if we're talking about 3.83%, there's a positivity with regards to the real rates of return for fixed income asset classes, also for equities as well. But then the question is, how sustainable is this? When you're looking at CBK, they're always targeting inflation, and they have a band that they work within, 7.5% to 2.5%. 3.83% is really not a problem. It's actually within the band. But I think the point of concern here is there's still slowed down growth. 5.6%, largely from the agricultural sector. There's not been sufficient rain, and food output has not been as effective, or rather as similar to what we saw last year. And then there's also been the concern with regards to higher fuel prices and the impact this has had on transportation as well as on the trade sector. So 5.6 is the number we're looking at today. 3.83 is the number that we're looking at with regards to inflation. We move along to corporate actions, and we have Kengen. Kengen has come out and said it will be redeeming the full amount of its 10-year bond that was issued in 2009. It issued a public infrastructure bond at a rate of 12.5%. The issuance was 25 billion in the market. They will be redeeming the final notes of this particular paper in the month of October, as well as making the final interest payment. Earlier in the year, the CEO of Kengen had come out to the market and said once they redeem this particular paper, they will be evaluating opportunities of coming back to the market to still raise debt for renewable energy especially. They're considering a green bond as well as any other issuances that their technical team actually proposes for them to come into the market. The fact that they've actually will be paying out this in full in this particular month was expected. It's nothing new. It's positive news. The counter has also paid a dividend for the first time in the last 3 years in this particular calendar year. So positive notes that are coming out of this. They are getting more into renewable energy and considering raising a green bond. The Capital Markets Authority did earlier in the year issue a green bond with one of the non-listed companies, and that is Acorn, company that was raising a green bond for one of its real estate properties. So it seems that the regulations are there. There could be an appetite that's there. We haven't seen the results of this particular issuance, but that's something that Kengen is looking to go. With regards to the price, there's been slight volatility over the year. It's now trading at about 6.1 shillings, but has actually been stable over the year with some interest coming in from foreign buyers. We have seen a bit of foreign buying for the last 2 years. 30% of the stock is actually held by the public, 70% is held by the government. That's an overview of what's happening on Kengen. Coming back to the Nairobi Securities Exchange, it's a very quiet, very quiet Tuesday. Not too much trade. Safaricom is the top traded counter. We'll give you an overview of this later on in the show. We take a short break to give you an overview of what's happening with regards to the daily commodity prices. We are streaming live on our Facebook page as well as on our YouTube page, that's Metropole TV. Before we take the break, what's happening in sub-Saharan Africa? This is a conversation we always want to have just to understand and compare. If you're investing in Kenya, what returns are you getting? What are the sentiments that are out there? And how are people positioning Kenya as an investment case, as an investment destination in the different asset classes? We tend to track the subjective views that are out there with regards to foreign investor sentiment and also look at the macros in these other countries. Mr. Charles Miano is an equity analyst with Nabo Capital. He'll be giving us this as well as detailed overviews of other asset classes, what opportunities are there, and what are his thoughts with regards to other asset classes in other countries vis-a-vis investing in Kenya. We take a short break. Don't go anywhere.